Yo, what's up guys? Wave Cipher here. Today we're going to be going over the most overlooked part of the Market Cipher indicator suite, and that's going to be the Market Cipher A moving averages. Now, if you've been using Market Cipher for a while, you've probably heard CryptoFace say that you should buy when it's underneath the EMAs when this is lit up and sell above them when it's dim. And this is correct. And the reason for this is the same as with the EMA strategy on my channel, right? What you're doing whenever they're positively crossed is you're buying an underpriced asset in an uptrend, right? So you're getting the best entry price on an asset in an uptrend. And whenever it's grayed out, right, you're selling an overpriced asset in a downtrend. Now, when you're doing this on larger time frames, what you'll begin to notice is how easy this is, trading strategy, right? Like, we have the bands lit up here. We come underneath them, you're longing. Your invalidation would be if the band flips, like here, right? And you're selling as it comes back up, right? Targeting previous highs generally, right? Or say you bought here, right? You take some profit as we get back to the top of the band and it doesn't really make it to previous highs and then it comes back down and flips, right? You get out of that, you start looking for shorts. You could have shorted here, taking profit at previous lows, right? Shorted here, and then you're riding that all the way down, right? Taking profit at previous lows, right? And then it comes back up for that scam pump right above the bands, taking profit at previous lows. You get the point, right? This is a trend continuation strategy. And you'll notice that it works on pretty much every time frame. Well, on every time frame, right? So whenever the band flips here to not lit up and then the price comes back above it, what are you doing? You're selling it. Your invalidation would be if the band flips again, you're targeting previous lows. So it comes up here, you sell it, taking profit at the bottom of the band, right? Doesn't get to the target, comes back up, flips on you, and you're out, right? And maybe you take this long, right? But the point is, it's going to give you the best entries into the trend with the least amount of work. This is a very beginner friendly strategy, right? You come up here, right? Targeting previous highs. You're just trying to buy assets that are overpriced or underpriced in their relative trend. And the higher time frame band is going to give you amazing opportunities to do that, right? And it's really easy to see. So hopefully you guys are seeing this. So like, let's just go through some more time frames, right? 6 hours, same thing. Giving you the same opportunities, right? Not getting faked out on this one like on the 4 hour, right? And you can use this on multiple time frames. Now what else, right? So you can also combine this with your DBSI. Now, when you do this, what you're looking for is you're looking for when, so imagine, so this last EMA, I think it's like a 34 or something. So let's just pretend that's a 50, right? So you're looking for whenever the band crosses above the 200, you're looking to buy whenever it comes back underneath the 200, right? And your invalidation would be if this crosses back under here, right? Now, when you do this, you not only have your local opportunities, but you also get your swing opportunities. Some of the best entries that you're going to get into the longer term trend, right? For example, if we go to the 12 hour here, you'll notice that just by using this simple strategy, you could have caught the absolute low of the range, right? We come back above. Where do we come back to? Well, underneath the 200. Boom. Positively crossed EMAs, you're in the trend at the absolute best position that you can get in, and you're riding it up for further upside, right? Let's take a look at the daily. Again, you enter here, you enter here, you enter here. These are swing positions. Now, you kind of would have got faked out here. If you had your 50 EMA on, you wouldn't have been, but yeah, you get the point, right? Let's look at even bigger time frames, right? Your 2-day. Perfect example here on the 2-day. If you just had your Market Cipher indications on and you're just looking at the 2-day time frame, you will notice that you would have longed here, you would have longed here, you would have longed here, and you would have longed here. If you are, like, let's say a position trader or a swing trader, and you are just looking at the 2-day time frame, you have just had 4 longs from the absolute low, every single absolute low of every trading range on Bitcoin, only using moving averages. Right? It doesn't matter what the oscillator says. It doesn't matter anything else. If you're just looking at the moving averages, you have now caught every single swing trade on Bitcoin just by looking at the 2-day on Market Cipher. And people don't have these turned on, right? I mean, you're just looking to buy assets that are underpriced in an uptrend and sell assets that are overpriced in a downtrend. And the best way to identify that is with an EMA ribbon or with a 200 EMA. All right. Glad I could keep that short and sweet for you guys. If you're new here, subscribe, join the Learning Discord in the description. Come by, chat with us. We're chatting live every day. And if you want to purchase Market Cipher, there is a referral link in the description and also a discount code to save 15%. Check out the EMA channel on the video if you don't have, or on the channel if you don't have Market Cipher. You'll be able to get this information there as well. And I hope you guys have a fantastic rest of your day. Trade safe. Wade Cipher out.